to our event, and we are really looking forward to gain the valuable perspectives and knowledge that you will share with us here today. With this, I hand over the event to Dr. Jayendra Kumar Sil sir to carry the event forward. Thank you.
Good afternoon. Second year IT. So there is a new buzzword ABCD. So A stands for AI, B stands for blockchain, C cloud computing, D big data. So it's the word big data. So there's a huge fight now among the new startups in this particular sector, and whether this fight and this particular world is sustainable or not, that we will see. Definitely, we have experts from the industry. So we'll start with Mr. Nishant Pradhan. His experiences he can share, will share, and after that, after all the speakers, we have a question and answer session. Mr. Pradhan.
Yeah, thank you, sir. Am I audible everywhere? Yes, on the topic of data and AI, now since I lead analytics for digital bank at Axis Bank, so I will talk about say what's happening at Axis Bank and what I have been doing. That will it will bring some context and then we can take some questions. So Axis Bank realized around 3 or 4 years ago that it needs to carve out a separate organization within Axis Bank, and they created this department called Digital Bank. They hired a chief digital officer, and then I joined this bank as a role of creating the data layer, for digital banking. Now, so digital, as you all would have heard, like it's been disrupting the industry, the economy for a long time. So there are a lot of players out there, and banking, prior to that, like it was. So I talk about 90s or in 2000 when there used to be core banking, where like each bank would buy one product, like either say Financial or XQ, like an example, people are aware. But so there would be one application which would take care of all your banking, whether it is lending, whether it is deposits, whether it is payment. So that was the architecture that we had for the last 20-25 years. Now what is happening outside is our customers are all digital. So our customers today are on Zomato, they are on Ola, Uber, you name the app, it's any sector, and then there are 10 apps out there. So what we are realizing in the banking world that we are still on a very monolithic architecture where there is a core banking like which runs the bank, whereas our customers they are availing services from say multiple say partners or startups out there. So we felt that we need to disrupt ourselves. Like as a bank, we need to be disrupted. We need to be more open. And so next time you will hear about like open banking that we talk about. Our design has to be more distributed, where we don't need to have everything in house. We would need a lot of partnerships out there. So there are a lot of startups out there uh, in the entire banking and lending eco space. So we need to be able to partner. We need to be able to say distribute it. So that was the realization, and hence we created this team where we've been looking at how we can say, work with our stakeholders to create a more distributed architecture. Now I come back to AI. The first question from the professor that how does the AI theme comes in. So there's a digital theme. This theme has been disrupting the banking industry. The second theme is the AI theme, where so of late, what people have realized that there's a lot of data out there. So you would have seen in social media, you would have seen whether it's news, whether it's like any. So there's abundance of data, What we lack is how do we identify the right data? How do we remove the noise from the data? How do we identify, say, the right data of our customers, of our prospects? And hence, there is so there was a realization within the bank that like, we need to be focusing more on say, data science and AI, which is all about understanding say, what is the right data and what is say the noise in the data. So the fields of AI and digital, they have been disrupting banking, and it is going to happen. So there are some banks which have realized, they have like created a new unit called digital bank. There are some which are still running like in the old architecture. But my view is like this disruption is going to happen, and uh, and it's already happening. And in fact, I'm playing the role say right now within Axis Bank. Uh, if there are any questions as of now, I can take, or there's anyone else who wants to answer.
Yeah, just wanted to know one particular thing. Since you are handling the digital banking, so you are using AI and blockchain and all. So Axis Bank is one of the pioneer in issuing a letter of credit through blockchain. Just throw some light on this.
Yeah, so we are doing POCs in blockchain, AI, like in all these areas. Uh, in the world of AI, we are advanced right now, but in the area of blockchain, we are still doing a POC. I mean, though we have pioneered, but what we believe, this is looking from my perspective, but with, but as a bank, as a group, what we believe is there's still some time, for blockchain, to evolve. We have done say, one use case, but as an industry, we don't see it being say disruptive like in the near future. Yes, like in the next 5 to 10 years, yes, like it's going to disrupt. Uh, AI has already disrupted, and hence we are in fact late, for AI. Like if you ask my view, we are actually late. We are better late than never. But in the area of blockchain, so it is more of now as a bank, we are again. I go back to the architecture. So we started off from core banking, uh, say one application, monolithic architecture, which we're running the bank. Now blockchain is again disruptive theme which is going on where like it has come up where people want to distribute. Uh, Say when you talk about your ledger, when you talk about people want to like distribute the processing, and it is also considered more secure. Today, like in today's world, so there are some problems like in the today's world which get solved, and hence in the new future, like it's going to be disruptive. But currently, like within the India ecosystem, I think the themes are digital and AI, which have already disrupted. So my view, like blockchain, it still has some time, and it will take some 5 years. But yes, it is required, and it is more required because the future of banking it is going away from your monolithic architecture to a more distributed architecture. You will see a lot of small players coming up in the ecosystem. You will have players like the data providers. And this has already happened in the US. So if you look at 40, 50 years ago, there was no Bloomberg. Bloomberg as a firm didn't exist. The sector didn't exist. So Bloomberg, Reuters, so these players they got evolved as the capital market got evolved in the US. Now similar ecosystem has to be created within India. Where you will have a lot of players, like you will have, say, players around account aggregator, say, data providers. You will have, say, UPI like insights providers. You may have, like you already have ONDC, OCAN. So industry will see a lot of utilities. Like it could be around KYC, it could be around, and in the next 5 to 10 years, when we have all these players and when we have all these utilities, we could have everything on a blockchain network, at that point of time. As of now, we see the trend, we see the wave like towards that. But I will put my eggs on digital and AI at this moment.
Thank you. We'll definitely come back to you. Just another thing here, I just like to point out. So till now, these all these players they're playing in the front end. So till now, banks there is no substitute of banks in the back. We'll discuss on this later. I'll now hand over into Mr. Shubhyo Sinha. So please share your experiences in Fearless.
Thank you, sir. Very glad to be with you guys to share some perspectives, not necessarily just from fearless, but a little bit more broadly from my prior banking experience as well as that nature. I think is this audible? Yes, I am. I think there's an element in the topic around inclusion, right? Using digital in the financial services space. I personally believe this thing has two dimensions, and like most things in life, fall into a two by two. This also probably falls into a two by two, and one axis of that two by two, in my mind, is how many more people get access to financial services. This the spread of it. The other axis, to my mind, is how much more can any one individual get from financial services. So you're talking about what's the spread as well as the depth. When I talk about spread, when banking is increasingly becoming digital, not just banking, financial services in general, increasingly becoming digital. Now the things that are happening fundamentally is turnaround times are shrinking. For example, a loan that would probably take 2-3 days, even a few years ago, is probably getting done like that. In people are advertising a personal loan in 2 minutes. That's probably one extreme. But you have data, you have access to other systems through APIs. You're not just dependent on the customer's data. You can pull data from different sources. You have algorithms. You are continuously building on the learnings of what goes NPA, what doesn't go NPA, and you start pricing dynamically. And you can extend, for example, a loan facility just like that in a matter of minutes, sometimes even in seconds. It is a pretty vanilla product. You get to open a bank account through video KYC today. You don't need to go stand in a queue in a bank branch and so on and so forth. So life is becoming easier, both for the provider, more importantly for the person who's taking the facility. And when life becomes convenient, the natural tendency is for more people to access that service because it is easy. And that's just fundamental human behavior, right? Anything that becomes easy, we tend to use more of it. The other dimension that is happening through digital and especially data, with a lot of the shareable data platforms being available, is at some point in time, if a very small micro business owner would come for a loan, or let's say a professional would come for a loan, typically all banks would refuse. And they would refuse because the lower you go from an income cut perspective, etc., it starts becoming risky. Now, what is risk? Risk you need to price. You can always want to play at a high risk or a low risk. Low risk will have a lower price. High risk you will build it in and you will price it. Now, our financial services system was not able to do it because a lot of that data and information about those quote unquote unknown categories was not available. And because that information was not available, I would feel very risky in extending that loan because I don't know whether this would become NPA tomorrow. What is happening today is with massive amount of data available, and not data available with the bank, you can pull from different sources, right? You can get a person's payment history of his mobile phone, for example. You can get payment history of utility payments. You get credit card payments. All of that. And then what is happening, therefore, is a lot of these sections which would typically get refused by a bank or a financial institution are actually now getting credit at the right price, of course, because the information is there and the financial services providers are also feeling much more comfortable extending those facilities because they have the information and they can price it properly. So because of digital and data, this axis of just the spread of it, more people getting access to financial services is being facilitated. Now, if you think of the y-axis, you take any one individual. Today, if you think of the entire gamut of financial services, it's not just about a bank account. We typically think of a bank account or a loan. You start from, like I said, opening a bank account, you have video KYC, life becomes easy. You get into a bank account, you do payments, and you have, UPI, you have phone pay, you have Paytm, you have 15 other platforms. Everything now getting integrated together. So you don't need to, forget about, I don't even know whether you guys know how a check works. Probably not. It sounds prehistoric to you. So the entire payment gamut you can do online. You go for a loan, the entire process, almost the entire process, can be done digitally online. Wealth management is becoming massively digitized. You go for insurance, somebody like a policy bazaar and so on. Not just the procurement process, but how you compare, how you look at different features, how you make your decision, how you make your purchase, how you make your claims, everything is getting digitized. So what I'm trying to say is because of this massive wave of digital and availability of data, financial inclusion is actually running at a super accelerated exponential speed because both these axes are playing out. More people are getting access and more people are getting access to more financial services. And these two are kind of playing out together. So that's the perspective I just wanted to share.
Thank you, Mr. Sinha. Just one small question, or you can say query. You have presence in areas where banks do not have, because Peerless being a player in this particular field for a long period of time. And so, are you planning, or the company is planning, any idea about new product which you are bringing for these, people in the villages, small ticket size loan or something like that, which banks normally do not give anything?
Thank you. So, see, I think we are going through. So we have operations largely focused on the institutional side, with small, medium-sized businesses and professionals. Now, in that category, short answer to your question is yes. We are increasingly looking at the remote location, tier 2 locations, small ticket size. Not as much in the pure retail segment, but in the small micro institutions, professionals, at an increasingly smaller ticket size. Because we are also learning. The more data coming in, we are learning how the algorithms work and so on.
Thank you. We'll come back to you again. Now I'm handing over to Mr. Kamal Kishor. Please share your experience.
You want to use this?
Hello. Am I audible? So, thank you, sir, for inviting here and being part of this great Vivaan. So, being the campus, always we remember our student life, right? So, we want to leave that and always being a speaker, other side of that has definitely feeling that sitting there in the auditorium. So, we are here also to learn from you, and you guys are here to learn from us. So, thank you, sir, for inviting here. So I have been mostly spent my time into funding sector, wholesale segment of funding sector of real estate basically. Basically being a civil engineer, I have moved to the real estate side and we have seen the whole cycle of funding of real estate segments. Okay, and this has been throughout for the thick scene of the financial ups and downs, roller coaster times we have seen through the last 3-4 years, right? Through the COVID period and out of that COVID period, how we came out. So that's a great running we have, like we can share with you guys. And coming to the financial inclusion, see, government is doing a lot of things also, right? For घर makan, roti kapla makan, right? Three essential things, right? So even governments are very much into that affordable segments. They have done a lot of schemes which they take help of the banking sector to help them with to go with start with the Jan Dhan Yojana. They start with and Manrega has been doing wrongs from the last government to this government has been carrying out, right? And India Awas Yojana also they have been doing it. So it's all into that. They want to provide the one basic need out of that, and they want to include digital in every other financial fundamental sectors of beauty of Ramadan. So if you see DBT is happening, right, when it is transfer, it's all the every other domains basically, right? Like Rajiv Gandhi used to say that if someone spends 1 rupee, only probably 16 paisa goes to the common people. That was the government also knew that, but now when DBT has come and Jan Dhan Yojana has come, probably this portion has gone up, right? So more and more of common people are getting benefited. So it's all an ecosystem which has been created by all the entrepreneurs, digital ecosystem, right? To bring out the common people on the one platform. It's a level playing platform currently, right? Everybody has access to mobiles, everybody has access to internet these days. Right? With a cheaper price, right? You can uh, use it or misuse it. It depends upon person to person, right? So what I believe that earlier they used to say that all the talents and the intellects will come from the metro cities. That's not old coach today, right? Everybody has access to data. And what you are doing with the data, that matters. Are you on YouTube on that or are you doing some courses on YouTube, right? For entertainment, for your financial literacy, right? Uh, because of this, Geo has dropped the level field, have disrupted the market of the telecom, right? And banking has been one of those domains which has benefited out of that abundantly, right? Uh, so, coming to my role, we have been in those segments wherein we have been funding to developers to develop their own projects and to bring out the one segment of political Pramakan to the common people. And we have been including all the see earlier we used to do a lot of paper documents, correct, to verify the financials and all those things data uh, and to issue them that whether they're worthy of that credit, worthy of that loan or not. But nowadays it's more of that happening digitally, right? And it's happening on a faster track basically, right? So that's how we are able to leverage the ecosystem which has been created. Right? So, thank you.
Thank you, Mr. Kamal. Kishor, just one. So you talked about, Chandran mobile, and we now popularly it is known as JAM, Chandran Aadhaar mobile. It's a success story, but still we find that banks are slightly reluctant to give loans to MSMEs. So because of the their mortgages or something. So why? Because there are insurance. Government is also providing insurance in different schemes. Still, banks are. That is one. MSME is the backbone of the country. So any comment?
Yeah, so MSMEs are around contributing a major 25 to 30% of our GDP basically. And now, if you see, I have seen recently there has been trend that they have started funding of SME. In my organization, this organization or the previous organization, they have started giving SME, making SME loans at a very affordable rates actually. And there has been change because once the COVID hit and there was learnings for all organizations for wholesale. Wholesale funding will be of the huge amount, huge quantum basically. And if anything goes bad, that will hit the P&L and balance sheet basically, right? So SME holds a major chunk of small and medium enterprises, business owners. And they have now realized that we can basically, you can say, rather than extending 100 crore to one partner, you can extend 1 crore to every partner, and that's how you're risking yourself, right? So that's what is their thought process now. And now everybody is going towards the retailization. That is how they are including more and more population and the requirements of the country basically. Hope I answered the
May I add, please, please. I think fundamentally there are three, four reasons why you see this phenomenon, banks not going as much to MSMEs. And that is one, MSMEs typically do not have data and information in a good, proper structured manner. So you will ask for, let's say, working capital and inventory, etc. They will not have that information. Second is MSMEs typically will not have what should I say, adequate governance and practices that banks would like a borrower to have. And there are various reasons. It's a bit of a chicken and egg, but that's one of the reasons. The third is management. So when a bank lends, apart from the data, the credit officer will also typically look at the management strength, people, etc., etc. And typically in MSMEs, the team management strengths will not, by definition, not be as strong. And fourth, I think this perception that MSMEs are more risky, which to an extent is true, that perception stays. And I think over a period of time when there will be more information and better risk pricing, that's when this perception will come down, because then it is not a matter of saying, oh, he's risky, I won't lend to him. But I say, oh, yes, he's risky, I will lend to him, but at the right price, and I know how to price. I think there's a mix of some of these things that leads to what you want.
But historically, if you see, if you take MSME as a total portfolio, so your percentage of NPA there is much less than the percentage of NPA in the, for the big companies. Historically, that is found. So their credit rating is definitely not as good as probably, because many of them do not have credit history or credit records. This is probably one reason why banks are reluctant, and which the fintech companies are taking the advantage.
I just add, so I think what Supriyo said, I'll just add to that, right? So if you just, I just ask everybody to think like a lender for a moment, and now it's not that the lenders or the bankers don't have the intent. So our CEO Amitabh has been saying over the last many years he wants to have a loan offer for everyone in India, like anyone who walks to Axis Bank. Like we do have an offer, whether it's 5,000, 5 lakhs. The intent is there. Now, where the question is, and as we said, your risk analysis and taking. So these two are the main concerns. Now, say for a large firm or say for a large business house or a family business who comes to us, so there is a lot of the assurance that we have. There is not data or for a firm which is a public company, so we have annual reports. Now, for small merchants, there is no data, and I think he mentioned it very well. And so there is no way for us to evaluate. Now, in the last few years, there has been some data which has been generated. Say, I'll take an example of UPI. So, what we launched, Axis Bank, we launched a product called NCA, Merchant Cash Advance. You can go in Google search. Now, NCA is a product where we are not looking at our traditional data elements to do our risk analysis and pricing. We are looking at alternate data. And now we get into the world of AI and alternate data where, say, if I have the data of the QR code transactions of a merchant, so say a supermarket where this guy is, so there are thousands of people paying him daily 50, 100, and I know his cash flow for the last 1 year. Now I don't know, see this person's business. I don't know his business. I cannot create his financial model or I can't forecast. I know his transaction history. So I know the P2M transaction data I have. So can I, based on that data, can I come up with some kind of a say pricing, for this particular merchant? So that is the area where we have started exploring that. Can I look at alternate data? So similarly, we're looking at telecom data. So if you look at Airtel or Tata, I mean, one third of our country is either Airtel or Jio or Tata. There's a lot of data where, like as a family, your mobile bill, your broadband, your dish, you're paying some thousand rupees every month. And if you have been consistently paying this, which means you must be doing something. This guy must be earning something. So I don't have his salary data, I don't have his income data, but I have the payment data. So you started doing your underwriting based on alternate data, where the payment data, where the telecom data, where the UPI data is also being used like in our models. Right? I think we should solve the problem eventually, where once we have underwriting models based on this alternate data, you will have loans to all these MSME. But the problem with there is like the maturity of the data and the maturity of underwriting models.
Yeah, thank you. Just in connection with this, what my bank is doing in China, they are also using this. But recently there is another problem. The Chinese government has questioned this, particular data. Okay. So before I hand it over to the take any questions from the any other point if you would like to make.
Just to add to what Nishant said, that alternate data or image history, which everyone is lacking nowadays, right? Now, you are known by your financial behavior than by any other behavior. That financial behavior is needed or required in every other angle of the human behavior. You will see this. But you want to go for matchmaking, they are want to know your financial behavior. They want to know what is your civil score. So it's not that it was gone days that they will not go and ask you how do you spend, where do you spend. So on the lighter note, I would say that still I was interacting and one newspaper may I came and my host husband to call a number which said that Nasamukti. Okay? So the number was there and he called and you know what was there? There 341 offer on the models. So that's how they track it. you know, because you are paying payments and you are not home. If you go to the Western countries or the Chinese or any other nationals, they have started making payments using the face. And it's advanced one. It's all using the blockchain and AI. And you don't need to carry your cards even. So that's a social security or the face ID. You become Chota Pinta and or Chota Pinta customer from them basically. And that's how they have disrupted every other lesson of they will pay you at a different rate depending upon how is your financial behavior. Suppose if you are using Uber or Ola also, Uber does more frequently than Ola. If you have a battery of 10% of if I have a battery 80% left, if I book a cab, you will get maybe double than what I am charged for the same destination because you will be forced to go on the same what they are charging you. I may cancel it because I have the leverage of that battery I can choose for others. That much they are interacting into your personal space basically. That's what I want to know.
Yeah, data and analyzing them. Just my data waiting. That's what they are doing. Yesterday, just there was a news which came out that you have this big $1 billion sale of Amazon and all. So first few days they have covered up. So Flipkart sold close to 4 lakh mobile handset. So they have increased the price. After
And
analyzing,
I will tell you, we have colleagues and all working in Amazon. If you are tracking a price for one component, say mobile, if it's getting 7,000, it was there earlier, and maybe 20% discount it was there. Right? Now you're happy that when it comes down, I will buy it. You go and check the same price for the same now, 30% discount, but now MRP will be 10,000 and 30% discount, same price. So it's the hack that they are using it. This hack is everywhere that one should know being a MBA student how to market it and how to not fall prey to that. A lot of things are going into that.
yeah. So questions. Yeah.
sir. You were speaking about the challenges faced by bankers and credit officers in disbursing loans to MSMEs. So actually, I have a question with respect to how banks prioritize priorities independently. Because in India, how banks function is very different from how banks function around the world. In India, like banks have to mandate or provide a certain limit of 40% of their NDTL in respect to PSL, like I talking of and artificial intelligence. Don't you think that banks in the coming future will find it increasingly difficult to fulfill obligations under PSL? You introduce yourself, sir. I'm Nishant. Oh, the best.
Yeah. So I'll talk about Axis Bank. So see, we today we have multiple. So there are different types of say businesses. So we have business loan, which is a PL product, which is like high ticket, and MCA, which is a very small ticket, starting from 15,000 to like 30,000 or 50,000. And now the small ticket loans for MSE, for MSME, and then there are like even other types of loans, that we have. We have police ODM. Now, so the way we are today, the way we are structured is we are going to focus on all sectors we have. We are also going to focus on prime as well as like subprime. And like subprime don't mean like completely risky. As I spoke about alternate data and leverage. So there will always be say some cushion or limit. So for say MSME, we come out based on our analysis, we say that we are not going to give a loan say more than say a lakh. That's because our risk models that they have like given us in that kind of an assurance. We say if it's a loan of say 48, for a say MSME, for a say for a larger like business loan or say corporate loan, we have say a higher ticket size. So we look at the last historical data of NPAs as I said. We look at NPA analysis, we look at say we look at DPD. There are a lot of metrics that we look at that customers who have not paid, like what has been their behavior, and they have not paid for how long. And based on all that behavior in each segment, we come out with say the limits, saying that we are only going to offer with this ticket size at this particular interest and only so much. Like it is not that it has to diversify our risk as well. We are not just depending on like only payment for the individual or say only MSME. So today these banks and I think all of like Axis Bank or HDFC, SBI, so they are they are almost like a universal bank where they have so there are 40-50 products. Now in the area of lending itself, we have like personal loan, home loan, auto loan, ODSL, loan against securities. So there are some 15-20 different products which are catered to a different segment. And then we decide how much should we give, and then we analyze that like what has been in each, what has been what has been the rest. So that doing it central level as well as product level. Yes, that's the model we have.
Yeah.
I am Ashmit Rai from the batch of 25. So my question is that with the advent of these new technologies, which are acronym as ABCD, what are the security concerns or maybe the potential risks in implementing these technologies in the financial services and expanding to the public? And if there are, then how can they be mitigated, particularly in the Indian context?
Yeah, no, good question. So, I know so why. So as a digital analytics, so 50% of digital is growth, right? And the remaining 50% of digital is all risk and fraud. So the other side of digital story. So we say that we will go branchless, we will go cardless, we will be completely digital, we will do KYC. Now it is good on the positive side where like you'll have low cost of acquisition, you like don't have to set up people, customer care. The banks these days which are completely digital as well. But the other side of the coin is again your risk and fraud. You are exposed to cyber threats, you are exposed to so we a lot of effort in fraud identification. And digital fraud is so we have a lot of like analytics that we do around let's say risk and fraud analytics, where we so fraud identification, fraud prediction, that's a very important area. So your question is very valid. Because 100 loans which are successful and if there is a scene of global which attempts for anti-money laundering or so that like also impacts our bank and the perception. So there is 50% of all our investments, like it goes on the risk and fraud analytics.
And data protection is definitely a challenge.
Just to add to that, I think the second part of your question is how do you address? Why don't you sit? To my mind, I think there are 3-4 very clear steps that an organization needs to take, and the problem is in the run of regular business, maintaining the run rate. Typically, organizations don't get the time or bandwidth to step back and do this. Number one is to clearly mark out what are my most critical business processes and then do a priority. You cannot solve for everything. There will be some elements of your business which will continue to be exposed, and you may go to sleep knowing that those are exposed, but those are low impact. So, what are my core business processes? Of those, which are the ones which are high priority, which can actually damage a lot? For those, what are the vulnerabilities? From what different perspectives? From a digital perspective, let's say, those specific activities or those specific business processes could be at risk. Where could those risks come from? And I'll give you one extreme example. We just think, people who are doing cyber fraud sitting somewhere. But imagine somebody in your tech department who got fired. He could go out and do 15 things because he knows ins and outs of what you're doing. Not really one would do such things. And once you identify what are the sources of those risks, then you start one by one solving take mitigation measures. Now, what I just said is 3,000 times easier said than done. Because when you're actually running a business and you have a run rate to meet and you have NPA targets to meet, it's actually very difficult to it sounds very theoretical to step back and do all of these. But I think even if organizations were to do like even 50-60% of the systematic approach, it would go a long way.
And I just add to so see what we also do. I think your question was also how can we use data and AI. So I'll take some examples. Like what we do is and this we've seen like in the last few years we've seen some examples. So we keep monitoring the transaction. Say today like a person Nishant has done say added a beneficiary like in the morning at say 11 a.m. and done a fund transfer from Kolkata. And then we see that just 1 hour, after that, at say like 12 o'clock, he does a fund transfer from Bengaluru. So this person cannot travel. Within 1 hour, he cannot reach from Kolkata to Bengaluru. So which means something has happened. What we do is like some of these rules we can in and program. Like some of these are also unsupervised. Where once we feel some transaction is fishy, then we go and investigate. So we run some AI models to look at some of these rules. Another example we've seen is you've added a beneficiary and immediately in the next 5 minutes, like you've done a very last transaction, which is unlikely. Say person was not logged in for the last like 1 year, and then suddenly you log in and then you do like refund transfer of say high amounts. So yeah, so like you're looking like that, and you will see if there are some patterns like this. which you can program. And then the others, so there are unsupervised models as well, where they keep looking at transaction behavior and which are highly unlikely, and then they like flag it out and they investigate. So you have built these models like in the digital world to be able to flag out such transactions.
Yeah, thank you. Thank you. This
My question is with the advent of natural language processing and sentiment analysis being a corruption markets and also in providing digital package solutions, personalized ones. Do you as an institution differentiate between the artificially generated narratives or the general sentiments in a peculiar world?
So you as a banker, you are asking me how will I like know about my exact sentiment or use them? Yeah. So I'm talking about the use case where so there's a big initiative called personalization. So that I was part of in the last couple of years, and I talk about that because I think that will like partially solve your question. So why personalization? Because like in the earlier curriculum, and I was talking to a few people here, like in the earlier marketing 101, we used to get taught in colleges, segmentation, targeting, positioning, where you have to segment, you have to do clustering. Now, in this year, in the last 5 to 10 years, like gone are the days where you segment. So we have realized that each individual is really different. Now I can cluster and say that these 10 people think alike. So now I think so every courses have to be fine-tuned with today's reality where you have to personalize to each person because each person is unique. The behavior, the thought, everything is different, and I think that's the realization where you will see the movie Divergent, which came around 8 to 10 years ago. Now, so as a time, we have we realized that, and we said we need to personalize. So any person who logs in onto our app or on the website, we cannot have a standard nudge. You take a decision. Or we don't want to call everybody and say get a loan. We need to have a very targeted message for each and every person out there. So say a lady, the age of 25, so we want to know about that person, we want to know about the financial health, we want to know that what is the most important at that point of time. Maybe you're looking for some education loan, maybe something looking for a marriage loan, maybe something looking for. So we want to have a very targeted and we also want to measure what happened when I actually marketed or the campaign. So we want to understand our customer, based on the customer, the demo, and their behavior, not just within Axis Bank app, but also outside. And as part of the role, we collected the data, we analyzed the customer, and then we figure out what would be the targeted ad or the message or campaign for the customer. And I hope we also look at customer intent, maybe not sentiment, because I don't know what customer goes and tweets on Twitter, but the customer intent that is the customer, same customer comes from a website, and or customer goes on a say Google search and say I'm looking for a loan. So we have partnership with SEO, we collect our website stats. We have partnerships with Google and many other firms. When we know what our customer's intent is, then we know his behavior, and then if it's an existing customer, we target them nudge on the app. If it's the new customer, we send say SMS or email, like if we get that. So that is how we personalize.
And I just wanted to add a few things. Second part was like there has been lot of messages like somebody has been impersonating you and asking money from your relatives. So that's how you want to do it, right? That was the second part of the student. So I would say digital is well, digital is good, but you can't remove humans from this thing. So it's going to be digital, it's a physical and digital. So there has to be persons required today and tomorrow, always it will be there. Even how much you leverage technology, physical and human beings are needed. And those things come in play, those things.
I'll give you one very interesting example. This and in 1950s, there was a product that was launched. I don't know how many of you are aware, called Betty Crocker cake mix. How many of you have heard of Betty Crocker cake mix? Very famous. It got launched. Basically, the idea was to make the process of making cakes very easy. It basically says that you take the cake mix, put water, put it in the oven to have a cake. Fantastic product. All reviews of the product was fantastic. All kinds of market research that they did. But somehow sales was not picking up. And they scratched their heads for a very long time. Product is very good, but people want to buy after the first buy. Then after a lot of deep interviews, etc., they realized that the housewives, who were the typical users of this cake mix, felt that I am teaching the family. The family is thinking I made a very good cake, but what did I didn't do anything. I just put water, put it in the oven or microwave or whatever, and then cake got done. My contribution in that process is actually very little. He has made it simple, but he has made it too simple. So you know what they did? In the next version of the product, they took out the egg component. And they said that you take the cake mix. Now you have to put the egg, you have to beat the egg and put the egg, and then you have to stir and turn and all that, and then you put it in the oven and cake will be done. Everybody was very happy. Because everybody felt that I am now making a contribution to the product. The tweak was very simple. Actually, it saved some money because they took out the cake. On similar lines, in the financial services world, what we also notice is
loan. There were all these years, officer looking at 15 parameters and coming out with a decision of approve, not approve. Increasingly nowadays, there are algorithms which are doing the same job. Now, research has shown that everything else remaining same. If I apply for a loan, and let's say two scenarios. Case A, in both cases I get rejected. My loan application gets rejected. In case A, it is an algorithm, a faceless algorithm that tells me reject. In case B, there is a human being which tells me, gives me the bad news that the case is rejected. I typically feel bad in case A. And my complaint is that algorithm is bad. It doesn't understand. The formula is wrong. I am a very good guy and I have X, Y, Z. Decision tree is wrong. If the person tells me, I somehow feel less bad. I get the same bad news, by the way. Now, what some institutions have done is they will run the same algorithm. The outcome will be the same. But at the last stage, that's like they took the egg out. They put a human being in who conveys the bad news. And the feeling is much better, although the result is the same. So coming to your point, and of course, as Kamal said, there will be lots of data, AI, digital, all of these things will happen. But somewhere there will be some element of how do you actually address what's going on in a consumer's mind. And in some of those cases, you may have to do these little tweaks, which are very clever at some level, but it serves the purpose without compromising anything else.
Yeah, and if you look at say one population, which is the elderly population. Now, see my mom, for example, if she gets a SMS or an email, she panics. She panics. Say if something comes to her, she feels because she has some FD there and she wants assurance. She will go and walk to the branch and she will talk to the branch head, branch manager. I got this. What was this SMS? So, so you can't have this digital as a model for, as he said, very correctly, that like certain segment of population you will still need branch. You will, because you can't capture the human sentiment, like what you said, and like sentiment analytics is still in a very primitive shape today. Not just in banking. I mean, today, we are struggling to get the sentiment. The movie industry is actually struggling. The data there is all noise. So today, capturing true sentiments of from Twitter, I think it's still being evolved. So we have to solve that problem. So the way we want to do in the digital world is
by collecting feedback. So what I do today is like on our app, like on my mobile app and Axis Bank app, we capture the clicks of my user journey. Say if you go and log in, so then I capture that I showed you this nudge, but you ignored. Then I showed you, some other campaign and you ignored. So that click data I actually capture and we analyze. If the customer has been ignoring my nudge, then we take that feedback and we probably assume your sentiment was against it. And then we reverse it or we send a new message. It's based on the backend data, we do, some analytics and then we keep changing our, say, digital marketing. But yes, we may not know the true sentiment till you meet face to face and ask, or maybe you do some survey and, till you do that.
Yeah. Yes.
Good afternoon, sir. My name is Ashal Osodia. I'm from the batch of 25. Questions for you, sir. Sir, we were discussing about financial inclusion. My question is on the same line. So, in this age of digitization, how do mobile banking and say digital payments platform promote the financial inclusions, and what are the potential pitfalls for this?
The answer to first question is very simple. How many sabziwalas and ironing guys do you see using a QR code? Sweet shops, chai wala. How many of those guys do you think used that Paytm or a QR code 3 years ago, pre-COVID? Answer is very clear. I think this is just going like wildfire. And by the way, the moment you find somebody having a QR code or a Paytm, necessarily means that most of those guys will have a back-end bank account. It is not just a wallet, right? So, which means that so many people are actually getting into the banking system very fast. And the way it also helps is it starts becoming an ecosystem. I will use, if the only proposition of a wallet was for me to take payment, I would hesitate. But the moment I know that it is not just about me taking a payment, I can actually go and make 5 payments and I can actually run my day, both incoming and outgoing, then it just multiplies several times over. The pitfalls, I think we have discussed. There is a massive thing around, getting misled, doing wrong transactions, cyber security. Especially the lower you go down the hierarchy in society, the lower the education levels, the more vulnerable they become to cyber frauds. And therefore, I think that is a big risk. And just to illustrate, many of you, or maybe your parents, would have received emails saying that you have such and such prize waiting for you from SBI Bank of India, and you give XYZ data and money will be credited into SBI Bank of India. And the subject line of the email will actually say SBI Bank of India. What will be the reaction of anybody in this field? You will ignore. Because somebody saying SBI Bank of India, obviously, that's some fraud. I was attending a session a couple of years ago when I was on the other side, and there was a cyber expert who was talking, and there was a question asked to him, and I was shocked with the answer. The question was, people sending such emails like SBI Bank of India, it's just very obvious, right? Nobody will go into that email, nobody will click, because you just know it is random fraud. Now that person said, look, the person who's sending this email is at the minimum 25 times more clever than you, because you've not been able to figure out. The audience was stunned, what's going on? He said the person has very deliberately put SBI Bank of India because you guys will sit and do 15,000 ways of filtering and data cart and segmentation and this and that. He's just straight come to the point because he knows any person who gets into the email after seeing SBI Bank of India in the header is his PG. You may feel very good that I got the fraud, I did not even get into the email. He's very happy with that. Because you are not his audience in any case. He doesn't want you to open the email. But the person who sees it and still goes into there's a very high chance of that person falling into his trap. So what is he doing? He's just, in one stroke, he's just cutting through the entire funneling system. And he's just hitting the target audience. And coming back to the question, I think somebody asked, the less educated people are, the greater the chances of people falling into these traps. So that remains a risk, I think, for some time to come at least.
In fact, in newspaper also many times you'll see that the celebrities it's not that they are not educated. You see that on a regular basis, RBI banks they send messages, do not click on any link. People still tend to.
I'm on from the Vivaan 25. Indian lending market has grown significantly in the past few years. We have some examples from history where such lending frenzies ended up on a bad note. My question is, how can we leverage the technology of ABCD in creating a sustainable lending environment without any harm to the larger economic landscape?
Yeah, so that's a good question. So I think the Indian government also is taking a lot of steps. Like if you look at it, like from I call it as the India stack. Where there are like bunch of people who have come in. So there is Aadhaar, which is your like identification. Now there is Open, where again they are talking about ecosystem and how different users can come in and say we have a role. To validate. See, at the end of it, what are we doing? At the end of it, all like each individual bank, whether it's HDFC, Axis, all the banks are in the same customer. Okay, there are 10 banks today targeting only you, where we have your data, we collect it from different sources, we use models, we message, and then you choose one of them. So at the end of it, so there's a lot of duplicate work which is happening in different banks, and now they're in PSP also, like family houses, like Aditya Birla, Geo Financial Services, Mahindra Finance. There are startups like M Pocket, where they are giving loans to, so there are now a lot of players, some 200, 300 people who are like the same customer. There's one individual in India, and all of these people are, collecting data, they are analyzing, they are doing their risk grouping, and then they are, so there's some, it's a method to the madness. I think like there are steps being taken with Aadhaar, and ONDC to come out with a framework where the digital identity, so that like these banks or these lenders, they know that who are the genuine people. So there are a lot of like lists that we use in the bank, like we call it as hunter checks or brand checks, where so there are some published like list of people who have done some laundering or who are frauds, and those lists are like universally applied in all the banks. So there will be more such initiatives which will take care of the risk. And I feel there's an opportunity in this ecosystem to come and play a role. And let's say if we can take, so there will be a player, say, like if say a firm, like you start up a firm tomorrow, and you say that like you will run this firm to do KYC for all the banks, Axis Bank or whatever. Or you start a firm and say, I will do you can do risk analytics and you play the role. So the customer is the same. We are all are doing it individually. So there's a lot of opportunity in this entire like digital lending eco space or in the ecosystem to innovate, come out with either government funded or private funded or public funds. So there are opportunities to mitigate risk and it is already happening like in some form and shape. We hope that will solve the problem.
There are regulated companies who are
Question on the discussion which was discussed, extending the loans to the people and segment is quite risky to show. So how the technologies like AI could be incorporated in that field, especially to do the credit risk analysis and bring those people into the financial institution.
Yeah, so at Axis Bank we have so we have a focus on this segment. So we call it as Bharat Banking, and like it's a big division. So similar to digital banking, which is like a horizontal where all the products we we sell and service digitally. There is Bharat Banking, where like all the products we focus on our rural segment. So there are say lending like products like tractor loan, and so where again like it is all about data. So if we collect
like data, for say farmers' data. Now, farmers today are mobile. You'll be surprised to know, and that when you go to the remotest village in India today, and as Subir spoke about QR code, you'll be surprised to know that your Ramu Tata is also on mobile today. He's on mobile. He's spending some 1 hour on Facebook or even Instagram. There's a lot of digital data which is already there. So it is not that the poor people are not on mobile; they are on mobile, and so they are already digitally inclusive. Now, yes, they don't have financial accessibility, and I think the same lens where the first step is like digital inclusion, which is already happening. Where your iron wala is using QR code. I mean, in fact, I've not seen anyone like doesn't have a mobile. Like you walk, they have a mobile. They are using social media. They are using GPay. They have an account. Now it's a problem of underwriting. It's a problem of how much loan can we give to whom, and how do we collect? How do we solve the problem of collection? There are some like thoughts with OCAN going on. You can create an escrow account. So there are initiatives being taken in terms of how you can solve this problem in the ecosystem. But as a bank, there are a lot of banks which are doing it. There are NBFCs like Mahindra Finance is only focused on rural segment. So they have been doing it for the last 10, 15 years. Like they have been giving loans to all the farmers and tractor loans.
Even a lot of finances are there. Farmer loans, two-wheeler loans. They are into micro loans, especially giving to small shopkeepers. So the rates are different. They are extending the benefits and they want to bring them into this banking system basically. So they are happening basically. They are getting it done. And if you go and check out the any rural segment and go and just ask them how much they spend on the monthly bills of mobiles or how much is the mobile cost there. You will be surprised to know that they have spent a good chunk of money better than you and me actually. So probably you may say that it's a negligence also because they have spent more part of their income on the getting mobile. It's not given they're not utilizing it. Still they have access and they do that for whatever reason.
Good afternoon, sir. I'm Amit Jha from the batch of 25. There is a lot of apprehension regarding central bank digital currency. I want to know how central bank digital currency is going to impact the banks world over and particularly Indian banks.
Yeah. So now digital currency. My current role at Axis Bank, not doing anything, but in my prior role, so I used to work at PMD, where so 4 to 5 years ago we were doing cryptocurrency. And now globally, like Fidelity, it's been there for last 70 years, the number one mutual fund in the US, and they were like very bullish about Bitcoin, digital currency in crypto. Unfortunately, within India, I have not seen anybody as bullish. So there are firms which are trying to understand, what it is and what they can do. But like globally, so earlier, like you would have seen, like even JP Morgan, like JP Diamond had told that he was against blockchain and Bitcoin, but then he reversed his statement. So because of the volatility of the asset, so I used to work in my earlier avatar where so we used to look at the crypto price and we used to look at see the variation in the price and it isn't predictable. So there's a lot of uncertainty. And what I realized is it's still very niche asset, very uncertain. It will take some time. But it has a lot of long-term benefits. Where and I think India will take its time, like similar to like blockchain. But yes, the Indian government is behind it now, and maybe in the near future we will have some POCs. But yeah, at the moment we're not doing anything.
You have to understand the fundamental difference between the UPI kind of online payments and CBDC. Apparently, they look the same. You're using your mobile device, you're making some payment, X person making a payment to Y person or entity. So, what's the big difference? The difference is now every time you make a payment on UPI or PhonePe, etc., GPay, whatever, the person who's paying and the person who's getting paid gets recorded somewhere, because both are accounts, some amount moving from one place. So somewhere in the great universe of data, it is getting recorded. Now, suppose you go to a shop to buy something, biscuits, and you give a 10 rupee note. That doesn't get recorded anywhere. You made a cash payment. So CBDC is actually a digital replica of the latter, which doesn't necessarily map the account to. Now, my hunch is, and I may be wrong, and these things evolve over time and one has to see. Given the typical psyche of the Indian consumer or player, something that gives you the comfort that you make a payment on digital, but nobody is actually watching who's paying exactly to whom, might help accelerate. That is my hunch, but not unwilling.
Another major reason is it's trade. So transferring money will be very easy. Of course, Indian CBDC must be accepted by others. So that's a major reason. That's the Niti Aayog, says also. Yeah.
In the interest of time, we'll take one last question, please.
Janasha from the batch of 25. My question is in regards to regulation technology, what we popularly call as RegTech. Now, because we know RegTech is recently developing, especially in the financial services sector, I want to know how, in the Indian context, are we doing it, and how are we overcoming the challenges by human intervention or human judgment is required?
Yeah, right. So RBI is way ahead of the banks. So they are, so in fact, they have started RBI Innovation Hub, it's in Bangalore, where they have like hired a lot of like senior people, and so they keep looking at what are the. So in fact, we spend a lot of time in terms of the questionnaires that we keep like filling, at the end of every year, and so we have some very senior like leaders like within RBI, and they understand the banking process, the situation in every bank in and out. They know like our strengths and weaknesses in terms of systems, in terms of capabilities. As Pio said, there are some capabilities still to be built. So a lot of time that we have to, we are questioned, we are asked, and then we have to stand in front of them, we have to prove it. So whether like it's a customer sentiment, whether like there is some like fraudulent transactions, like we have the process in place. So there's a lot of initiative going on from RBI end to ensure that there is very stringent regulation, like in the Indian market, and hence if you have seen the Indian financial market has been very strong. Like they have not been hit as hard as like the other financial markets globally. In fact, and that is because of and the Indian culture is we are very clever, the people, and so we are very good in like catching others, so we have that knack, and we build a lot of rules. And before we within the bank, like we build a process and system and check. RBI and their team, they already know what needs to be done, what can happen, and that. And hence, I think like our environment would be more safer. It'd be more. We are more democratic as well. If you look at other countries, we are more diverse. We are more democratic. We are more like regulated. We like to be regulated. Like even if we don't want to take a lot of risks. Like as a bank, as well as like in NBFCs also, we are not. Subprime crisis will never happen over here, because like even before like as an NBFC or even like M Pocket as a firm, where they can go and give loans to anybody, but still they are like so players are asking RBI to regulate it. So we want teachers to regulate us. We want to give exams. So as Indians, we want to be regulated. We want to be. We don't want to. We are not as weird and say risk loving. And yes, I think that culture will reverse, and a lot of initiatives already happening. Tech is going on with like full swing.
During my banking days, I used to spend a lot of time with the regulator firsthand. the regulator typically will come to a bank for an annual supervision. It's called supervision, but it's a harrowing time. Those, the month and a half, they will basically sit down at your bank, 50,000 questions, 20,000 follow-up questions, this, that, and the other. Now, my experience from there is, having said that, bunch of things are happening on RegTech, but I think we have a very long way to go. Very, very long way to go. And it starts very simple because the way, if you think of the aviation value chain, you start from what is the regulation. So RBI will, in this case, let's say RBI, in some cases maybe SEBI, it will have a set of regulations, which are typically circulars, notices, which are put up on the website or sent to the banks. Then the second filter is, do the relevant people in the bank know of those relevant regulations? And at each of these steps, there is a fall through. You, at any point in time, you do a survey in any financial institution, in the relevant department, the person will probably not know of a few important regulations. Because circular came on some date, it slipped his mind, etc. Next is, okay, so whatever I know, how much of that is actually getting adhered? The internal person, so if he is running Axis Bank, if I am running something, how do I know at any point in time that XYZ, here are the 7 regulations relevant to my department or my function, and those are getting fulfilled or not? Currently, there is no system. It's like, in person, physical process, XYZ. Then comes the supervision. So RBI will typically, the way it still happens is RBI will set up some questionnaire in either Microsoft Word or Excel. And then the receiving institution, bank or NBFC will put down those answers in Microsoft Excel or Word and send back. And then there will be clarifications and this and that. Then when you make a little Excel with color coding, done, not done, tracked, not tracked, etc. And that's how it happens. Now, my point is, tech, digital, these become overwhelming big deals. When it comes to RegTech in the Indian banking context, I think step 0 is to just solve some of these very basic things. Why do I need to go to a Microsoft Word or Excel? Why can't I have a system which is common to all banks? Because the set of questions there with the parameters are similar. Are not similar, they are same for all banks. Why would a person in a bank not get an auto trigger online, maybe through a mobile app, every time a new circular comes? Why would I not be able to track the adherence or compliance to a set of regulations in my institution online? Why do I even need to fill things up? If there are systems that can be tracked and I as a bank, I know these are being tracked or not tracked, you just create an access for the RBI person to see the same thing. Right? And so on. And these are, it sounds silly, I know, but these are some very basic things which I think RegTech needs to fix at a level 0. And of course, there may be, more complex things coming in, but I'm just trying to say in India, with respect to RegTech, we are very basic at this point.
But RBI is one of the most conservative central banks in the world. So that way they are very strict.
Which saves us.
Yeah.
Yeah. Which saves us.
So anyway, thank you all the speakers, Mr. Nishant, Mr. Kamal, Kishor, for a lovely discussion. Yeah. What do you just
On behalf of the whole IIFT fraternity, I would like to sincerely thank our panelists, Mr. Nishant Pradhan sir, Mr. Supriyo Siddharth sir, and Mr. Kishor sir, General Moderator, Dr. Seal sir, for an invaluable contribution towards the discussion. And your insights and thoughtful perspectives on vital topics such as financial ecosystems, importance availability of data and feedback, leveraging AI in risk assessment, hyper-personalization of customer experience, and reaching people in rural areas has significantly enriched the discussion. It is through your collective effort that we have gained fresh insights that will undoubtedly shape the way in which we think about this topic. On the behalf of the organizing committee and all the participants, I want to extend a sincere appreciation to your time, effort, and your expertise. Your presence was the highlight of this summit, and we are grateful for a positive impact that you made. Thank you.
I would like to invite my colleague to hand over the moment to Nishant Pradhan. I would like to invite my colleagues here again for giving a word to Dr. J.K. Singh. Sure, thank you, Master.